following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 2nd, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6664. You can send me an email, steve@tfn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 59 points at 21,202. S&P is up 6, trading at 2436. NDX 100 47 points. She's trading out at 5863. The Russell up 14, 1%, the leader for the second day in a row. That's trading out at 1410. Semis are up 7 points or 0.7%. New York Stock Exchange is up. NASDAQ Composite, everything is mean and green out here. Volatility Index trading out at 978. Light sweet crude is trading down 55 cents at 47.81. Gold's up $9, $12.79. Lead the charge here to the upside. You've got Broadcom Limited, AVGO, as a ticker symbol up 18 buckaroonies or 7 7/10%. Regenerative Pharmaceuticals, you and I took a look at that. That's a consolidation breakout. That has much higher to go. She's trading out at 482, or up $17. Cooper Company's up 16. Amazon is up $11, trading out at 1,007. Google is up $6, trading at 994. That'll be the next one over $1,000 out there. Sherwin-Williams painting the town green. She's trading up $6. To the downside, Restoration Hardware, RH, is a ticker symbol up off 26 points. Yikes. $15 to the downside. AutoZone, AZO, down $5, less than 1%. Pinnacle Foods off $4.60. ADP, Automatic Data Processing, down 3% or $3. So I want to look at whatever you want to look at. We have already had a couple of requests, well, several requests out here. So we're going to go fulfill those requests. Let's first get to the den requests, so that I don't overlook those. The first came from Kaz in the den. He wants, or she wants, to take a look at the light sweet crude. And we took a look at this yesterday. Took a look at it. I don't recall who we took a look at it for, but we did take a look at light sweet crude. And what we suggested, in fact, somebody was looking to buy it. It might have been Jeff in Tennessee. Was it you, Jeff? I think that it was. And what we suggested was that it looked like light sweet crude was going to get down and test the bottom. No, let me change this here. I want to go to the stitched together contract out here. I think the profile levels on the weekly are just slightly different. No, looks like they're the same, one and the same. 47.23. And in fact, 47.23 was achieved. In fact, the low was 46.74. We're trading right now at 47.82. So, and if we take a look at this weekly profile, the weekly profile is going to have more meaning to us than a daily, than an intraday profile. And the makeup of this profile, let me just try to expand the chart. It's going to be a little bit easier if I really try to expand it here. In fact, I'm just going to turn off price, because if I do this, then you'll see what it is that I see out here. We're just take a look at this market profile, brand new market profile formed this week. Kaz and Jeff. And what we can see here is that point of control, that little cyan blue at 48.27, closer to the bottom of the box, 47.23, and a fairly decent wide box, 51.39. So the trade here for Lightspeed Crude is simple. Simple and easy. You know where your stop goes. Your stop is a close below 47.23. I'm not talking about 47.21, but give it a bit of space out there. But any close below a bit of space below 47.23 says Lightspeed Crude is going lower. This structure of this box is bullish. So if you're looking to take the trade was at 47.23. We talked about that yesterday out here. So today you want to see it close above 47.23. Now, it only has to bounce to 48.27. Right? I'm going to go ahead and put price back on here because that's the point of control. More likely, though, more likely than not, instead what's going to occur is you're going to see Lightspeed Crude make its way all the way up to the 51.39 level. Watch 48.27. If you're in the trade, if you decide to get in the trade, you want to see that cleared to the upside. That's really all that we have to say on Lightspeed Crude. Well, I'll add one more piece to that puzzle, and that is a 60-minute chart here, which also had a bottom of a box out here. Now, this was a bearish structure. Structure, why? Because the point of control, the center of the box, that little cyan color, that's the left-hand panel chart on my screen, closer to the top of the box. This says sellers should have been in control for the price area between 47.56 up at the upper boundary line, all the way down to 46.88. Price is now trading above that. That is a line of demarcation. That is if you're playing some type of, that is a line that should have held. The mere fact that it has failed is really another indication to you and I that Lightspeed Crude is done moving lower, not wants to go try to bust them to the upside, and that would be the 51.39 level. So hopefully that assists you there. Now, we had another request to go take a look at Goldilocks, so let's go do that. In the case of gold out here, a couple of different things that we can take a look at, and so we will. First, we're going to go populate the 4 time frame, 60, 240, daily, and the weekly chart out here. So where is it that gold is headed to? Well, likely 1290.30. Now, we're going to watch that like out. Well, you take a look at the chart here. You see mostly green shoots in the shorter time frame, shorter being 60, 240 daily. We kind of gray here, a little gray hair in the weekly chart out here. Price has been able to get up and test that point of control level, the center of that box, 1280.30. You have noticed, just as I have, that the center of that box is closer to the top. That says that sellers should really be in control at the 1290 area. The snipers should be sitting up on that wall, ready to take out all of the bulls. If price closes above that, that is a breakout. Well, there would be another breakout party that would be going on. If we go take a look at this continuous contract, here is a monthly chart. Going back just simply from a descending trend line, going back to September 2011, you can see that that is under attack, so to speak. But that attack level is going to be that 1290. 1290, getting above that, you will now clear 2 resistance zones. And what you and I can then say is that when it comes to Goldilocks, the change in trend, the longer-term change in trend is now underway. And all that we've seen really take place with regard to gold this week has been nothing more than a test of Stevie's oscillator unchanged line. If we go take a look at that, shoot, I should not have changed pages out here. Let me go back. We can do this quickly. We can do this before we go to breakout here. I had it. And it got away from me. Here we go. Here's the daily chart. And what you're going to see is Stevie's red line out there. Again, tested again today. Tested and rejected. Price is headed higher. Whether or not it can take out that resistance zone, I don't know. But we'll watch that 1290 like an eagle, like a hawk, like a couple of traders. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 59, S&P is up 6. So if you're listening to this show, I don't care if you actually do it during the show, really, because I think it's that important. And, all the hoopla about climate change and this and that. Last night, as I sat down for dinner, as I often do when I'm at the house, is I like to turn on. I think it's a Boston station that plays it, but it's all these different TED Talks, and it's on for about an hour or so out here. I love listening to these speakers. One, they're so well prepared with regard to the material, and it's just so enlightening and educational out there. The one that was on yesterday, apropos, was dealing with climate change. And one of the speakers that they had out there, I'll spell his name for you because I want you to just simply go out there. It's a 20-minute speech. Maybe it's not even 20 minutes. It'll be the most important 20 minutes that you can spend. And then I want you, if you agree with me, I want you to go ahead and pass that on to as many people as you possibly can. The guy's name is Alan Savory, Allan Savory. If you just put in TED Talks, Alan Savory, the actual talk was how to fight desertification. I'm not talking about the kind of dessert that you eat out there. How to fight desertification and reverse climate change. Folks, it'll open your eyes, and you will be able to call BS before Steve on so much of the garbage that we actually hear out there. Now, you may have a different opinion than I do. Go watch this video, please. Probably the most important 20 minutes that you will spend. Doesn't matter to me if you do it right now. Or you can do it after this. You can do it this evening. You can do it this weekend. Just please do it. It is really cool what this guy has figured out. Okay, let's go figure out the markets out here. We won't deal with climate change, but I do want you to go watch that. Okay, with regard to the markets, there are some questions that came in. One from a new subscriber that was interested in one of the charts that I had put in there, asked if I would go ahead and explain it further. And that was dealing with the New York Stock Exchange. And was dealing with the ratio-adjusted summation line out there. Now that I do, let me just do this. Let me first go here, and we'll take a look at it. let's just kind of go through some of the typical stuff that you and I look at. So oftentimes, nearly most every day, you and I look at the advanced decline oscillator readings out here. And that's what we're looking at right now. We're taking a look at the New York Stock Exchange left panel, NASDAQ Composite, panel next to it, the Dow, and then the S&P 500. Now, the data that I have that comes through my system, I can calculate what the advancing declining issues are doing and create a oscillator for it, difference between two exponential moving averages, in this case here, 19 and 39. That is the bottom panel of those first three charts. The simplest way to interpret it, and there are some complex ways, we don't even need to get into those at this stage here, is when price is above the zero line, that little green line out there, the message is simply bullish. The message is telling you which side of the market to be on. Now, this is not going to be able to time a top through some other patterns out here. Likewise, when price is below that level, what you should be looking at is a more bearish type message out there, or a retracement, right? I use the word bear. I'm not referring to bear market, just really directional signal as to where you should be looking. You'll also see just above that, what you're going to see is a summation index, summation line. And many people use it differently. I actually do my own calculation. That is nothing more than summing up. Here, if I just simply, well, let me do it this way. Let me go to this chart here. Let me turn a few of these tools off with regard to the New York Stock Exchange. Now, you might be saying, well, what are all those tools, Steve? That looks pretty cool. Well, I pay attention to the New York Stock Exchange, the total number of stocks at new highs and new lows. That's how you actually, one of the tools that you use in order to be able to identify one of those Hindenburg omens out there. At this stage here, all that we can see is we're not at new all-time highs. What I can say, we're not at a new refreshed high for the year, or really during the last year and a half out here since December 2016. We're not above the peak. That's okay. We are seeing a declining trend line that's being broken, so that's a bit of a positive. You've got 316 issues as we speak right now at new all 52-week highs. You've got that advanced decline oscillator reading. We look at plus 150 levels and minus 150 levels to provide us with a lot of information. The reading right now is 88.65. And then we've got, let me just go to turn a couple of those things off, because we're not going to spend any time other than what I just shared with you, or just, referenced to you. We're not going to look at it. Let me go turn off the advanced decline oscillator reading. Okay, boop. Betty boop out here. So let me turn off. Well, let me cover this first. Let me do this here, because it's worthwhile to take this tour. The top line out here, by the way, is the top line. I'm in panel number 2. Let me do this. Let me expand it up, makes it a little bit easier. So panel number 2, this is the advanced decline line. The current reading on it will not match anybody else's reading, because it always depends upon when your actual start date was. Regardless of when your start date was, you still will have the same result. That same result is today you are at a new all-time high. One thing that I can share with you is there has never, now I don't mean never, I mean never, has a major bear market ever started with the advanced decline line at a new all-time high. It just doesn't happen. It won't happen this time. It's not going to change. Those of you that believe that we are at an inflection point of a major bear market, well, good luck to you. It hasn't happened in the past. I'm not going with it starting off now. Now, the problem, that doesn't mean there isn't a potential retracement out here, because there likely is. There's not a confirming number here with regard to the volume oscillator, volume summation index, and that is panel number 2 out here. Yeah, and you take a look at that number, 539,112,432. I mean, yeah, it's a big number, but it's just summing up. It's just a summation line of the volume oscillator reading by day, the 19 to 39. So not to get too confused out here. In the past, and you can't use this as a timing tool, this is nothing more than a confirmation as prices rising that, hey, you're totally all clear. We've established that you're a new all-time high. There's no major bear market that is going to start today, tomorrow, the next day. It's just not going to happen. However, there are some problems underneath the covers inside the New York Stock Exchange via its volume summation index out here. That's the bottom panel. You can see in the past when the advanced decline line is rising, But we're not seeing that same thing on panel number 2, the volume aspect of it. That's where you can get some type of retracement. Maybe it can turn into a correction, a 10% kind of a deal out there. We come back, and the last time that we saw that was back in September 2016 through October 2016, just a small decline out there. The time before that where we saw this divergent pattern was back in 2015, the October through about November the 4th, 2015. Decent decline that followed. So it's worth paying attention. That's why I'm sharing it with you. It's why we are paying attention to it. You don't see it often, but when you do see it, you pay attention. If we come back, the time before that, that was very prevalent, was back in April of 2010, the entire month of April. And then we saw a pretty nice decline inside the New York Stock Exchange. We can go back further. We can come back to the 2007 top. It really was the first top that was in July, where you saw price rising. In this case here, we saw the advanced decline line not making higher highs, and the same thing inside of the volume oscillator. That led to that first decline. It wasn't there during that October top out here. Again, it's not a usual pattern, but it's a pattern worth noting. We come back from this break. Let's go take a look at the summation line, because where it's printing right now is muy importante. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the New York Stock Exchange. We're taking a look at right now what we're going to cover is the summation line, which is nothing more than the summation. That means each day's total added to the prior day's total. So you've got a running number out there of the advanced decline oscillator readings. Now, what you're going to see right now is the current print on this is 53.35. You'll see it change, basically second by second as data comes through. That's important to note that you are above zero. Now, what I do inside my newsletter, this is take a look at advancing issues, declining issues, and unchanged issues. What I do in the newsletter, I have found that you get a cleaner signal by not taking a look at the unchanged issues. But in either case, this will kind of prove the point out here, or at least provide you with another use of it. So that'll be cool. You'll pick up a paper, you'll take a look at it, and you'll be able to have another use for it. Now, today's trading is really important. I do not know how the end of the day close, what that's going to look like. I wish I did. If I did, I would share that with you. We can make some educated the decisions about where we'll head based on some other patterns, but we're not focused on that. But the reason why it's so important is because today this line is flirting with the zero line. What I want to share with you, what I want to show you is just how important that is. As an example, I'll come back to what I like to refer to as a zero line failure. And that takes us back into this top out here back in November 2015. In my data box, hey, how about that? The voice kind of changed there. But in my data box, right now you'll see the reading for the summation index is minus 172.42. And you'll see as I move it forward each day out here, minus 79.80 is where it got to on November 5th. Then it started to turn back down again, minus 93, and it always stayed below zero. And you can see from that point forward, what it did was it helped to identify an area where the market decided to start moving lower out here, right? Pretty cool, huh? Now, you'll see just how cool it is because it also assists you with regard to what side of the trade you want to be considering out here. So that was a zero-line failure out here. It can work the opposite way, too, where price comes down, tests the zero line, and starts to head back up again. Here's another zero-line failure. I want to just pay attention to these at the moment because that's really the pattern that is in play here. If we take a look at back on April 27th, okay, April 27th is when the summation index got just above the zero line. It actually had begun 2 days earlier on April the 23rd out there, and it lasted just for a couple of days. It got down back below it. There was a little failure, and this is what you want to be watching for. Because even if we close above it today, that'll be at least one strike for the bulls. I don't call it a strike. That'll be one check for the bulls. But what you don't want to see is soon thereafter, this thing fail at zero. Oftentimes, it just fails right as it gets up to that level out here. And you can see as it began to fail shortly thereafter, we went and made a 100% move back into the May 21st time frame, right, when there was a fairly decent high inside of the market. And you can see we were well below zero in that summation index out here. This is what's referred to as a zero-line failure. Again, the data, when you can cut out the unchanged issues, it makes just a slight difference, but I found that it gives us a better signal. But many of you aren't going to go through and do all that data work out there. I've got to manually number crunch it out here or pay a programmer to write it for me. I don't need to do that. I can just manually, I have a manual spreadsheet. I don't have to necessarily update it every day out there because I know where we're at. If you go back to 2007, just as another example, so that you get a feel, when the top was formed here in 2000, and this is the 2011 top. Here's another example, May 2nd, 2011, right before the flash crash, right? Before we had, so you can see, just use this, see how we were below zero out there. This is really what I'm sharing with you is probably the best, the ultimate use for using the summation index. And when you are above zero, by the way, do you want to be short the market? Now, I'm not talking to those people that just simply want to try to sell the top tick. What I'm sharing with you is something that you can use to try to catch the bigger trend out here. So when you are above zero, and you are rising, which is a green line, do you really want to be? Now, you can't trade the New York Stock Exchange, but it's a decent enough indice out here to at least be able to explain what the markets are doing. And I get caught up into all of the hubbubaloo out there was whether we've run too far, too fast, too this, too that out there. Instead, let's just stay focused on the meaning of this tool or this indicator with regard to what the markets are doing. If we come back into the 2007 timeframe out here, take a look at October of 2007. You can see that what the summation index was doing was trying to get up to zero, turned right back down. It got up to the highest level that it got up to was minus reading of what? Minus 303. Minus 303,802. That was on October the 12th out here. Minus 303,802 began turning back down. You can see how my line there changes to red. If it's red, you're dead, so to speak, out here. And so and you can see that during the majority of the move down, right? During the majority of the move down into 2009, where was that sum? In fact, you take a look at that nice little counter trend rally that the market had back into May of 2008. You had another, in essence, zero line failure. Was never able to get up to minus 231, I think might have been the highest reading out there. Turned right back down, and that was it. Counter trend rally was over and continued to move to the downside. So a very cool tool. I know there's other ways that you can use it out here. Right now, really, if we just do kind of some normal stuff, we're just in a wedgie pattern, meaning we have rising bottoms. Now, you tell me, when you take a look at rising bottoms out here, is that bullish or bearish? Just looking at the summation index going back into January 2016. You can, and if you're not sure what I'm referring to, let me just get a blue. Can I have a blue line? I'll just use a blue arrow out here. You can see how we just simply have rising bottoms out here, no matter how we want to go ahead and draw this pattern in. And you're going to see nothing more than really a wedgie type pattern out here. You know, does that we're just inside what's really, quite frankly, this wedge pattern that you see here is often associated with horizontal type moves. And you can see by taking a look at price out here, that's really what we're in, is horizontal type moves out here. And same type of meaning, if you bust the trend to the upside, you know, that is a bullish thing. So that, my friends, is a couple of different ways for you to be able to use the summation index. And now we take a look at it where we're just slightly above zero, 55.10. Does the market finish long and strong today? And if it does and you're above it, boy, it's a wonderful message to say, don't be short. Let's just wait for the market to actually turn down, if in fact it does that. If that's your inclination, wait for the market to turn down and give you that type of signal. You've just seen, if you want to stack the odds or the probability in your favor, then this is the thing to do. And likewise, it's above zero. It's saying, for goodness sakes, do not take the short position until at least you see this thing turn down. And being so close to zero, you really don't want to have to do it until you get the confirmation. So sorry to exhaust all that energy during that segment, but I think it's a pretty valuable segment. You might want to replay it a few times out there. So we get back from this break, we'll go check the emails. We'll go see if there's some other requests out here. We'll go look at some of the other indices. Take a look at where the NDX is headed to, as an example. Right now it's headed to 59.01. Shoot, we could get there today. That's the top of its horizontal trading range boundary line. You're trading at 58.72 as we speak. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 74 right now. S&P is up 9. Had a request that question that came in earlier in the day. Asked if I would take a look at the volatility index. So that's something that we would normally do. But the individual that wrote in had read an article that suggested that with volatility being this low, that it was dangerous and that the next bear market would start soon. And so I'll just simply go back and share with you that which I can about that. So we took a look at the advanced decline line, and you will not be able to find any bear market that started with the advanced decline at a new all-time high. So that much I know. So we already have that piece of information. I know that wasn't the question that was asked, but, you know, we do have to go ahead and utilize these sets of tools out here. Man, it looks like the U.S. Team Oracle, what were they must have been out drinking late last night. Geez, that was just a disgusting turn that they had there. In any event, that's neither here nor there. So let's go take a look at the, historically speaking, the VIX readings when the markets are at all-time highs or at the beginning of a bear market. So right now we're at 987. Not the lowest reading out there, but one of the lowest readings over the course of the last quarter century out here. But if we go back and just simply, I'm going to take a look at the last 3 or 4 bear markets. We had the most recent bear market that we had was in May of 2001. And by bear market, what I'm referring to is a decline of 20% or more. So from the actual high down to the low out here. And if we take a look at the reading of the volatility index, you were at 1599. Not at 9 something, but you were at 1599 out there. So, you know, again, I didn't read the article. I'm just referring to or coming back and taking a look at previous historical type readings where we have actually seen bear markets, not where we get corrections from, but actual bear market based on the normal nomenclature. Good thing I didn't have to say that 3 or 4 times out here. So then we go back to the October 2007 timeframe. October 2007, this is really a great indication, and that was a big bear market. All right, we are down 50% or something like that, 45, 50% out here. Now, the spot volatility index reading there was 1888, just nearly twice of what it is that we are trading at as we speak right now. And you can see that what we had was basically rising bottoms in the volatility index. You might say, what do you mean by that? And what I mean by that is we just take a green line out here, a green line. There we go. And I just come back here into the 2007 time frame. You can see all you had was just a rising bottoms pattern inside the volatility index. Now, that rising bottoms pattern inside the volatility index, while you have price moving higher, okay, also inside the S&P 500, that's a pretty cool indication. We can take a look at that as well today out here. But that's really, the rising bottoms pattern is really helpful and important. So did the low spot volatility index, is that where we were at when the 2007 top formed out here? Now, the problem, if we as we continue to go back and back and back, is there's one of these bear markets occurs about every 5 years out here, 3 to 5 years, and so we're limited on the number of data points. But the question you would say is, the writer of that article would be, where in the Sam heck, or whatever word you want to use out there, did you come up with that conclusion? Right. So if we come back to 2000, let's just stop at, well, I don't know if we have to stop at 2000. We can go back a little bit further. Right. But if we go back to 2000, May 24th, 2000, as an example, we're looking at the S&P 500. The spot VIX index was at 2331. Was anywhere near the actual, low. Second back in August of 2004, you were down at 1689. So no, a low. How about here? We had a nice about 20%, I believe, was the correction back in 1998. July of 1998, you had a spot VIX index of 17. Buckaroonies out here. Well, how about the 1990? There was another about 20% move in the market, right? So back in 1990, you can see you had a nice rising bottoms pattern inside of the spot volatility index, priced out around $17. So look, the data does not support that just because we're at 983 right now, that odds favor that this is going to signal the beginning of some type of bear market out here. I just think the absolute wrong question is being asked. So you'll read a lot of stuff out there. You can call it all BS, because it was all before Steve was able to share with you just simply the facts, right? Nothing like Dragnet out there. That's why I shared with you some great facts about climate change. They're not my opinions or anything. Just go watch that 20-minute TED Talk by Alan Savoy. I mean, just go do it. I don't know that there's anything more important for you to be able to do, because then you can call BS on a lot of other things that you hear out there. I'm no scientist, and certainly no rocket scientist out here, but I am, just like you, fairly logical person that can listen and see. See, in this case here, I'm not giving any of my opinions about the spot volatility index. All I'm doing is saying, let's just go back and look at other points in time. That's what Alan Savoy's presentation did. He just actually showed you examples of, here's the problem, here's the solution, here was the outcome. It's the exact same thing, and when we do that, then we don't have to worry about somebody else in the media. I'm talking the stock market, I'm talking in the climate change market, spitting out something that was, they're just reading off a teleprompter. There ain't no teleprompter in front of me, and there's no teleprompter in front of you either. Okay, didn't see any. So that should answer all the questions I think that have come in that I know of at this stage. So let's come back here and go. So is there anything on the horizon for those of you that are intraday traders out there where we can see some type of reversal? And the answer is, well, I don't know. Let's go look. Let's go take a look at the NQ. Let's go take a look at the strong dog in the market out here. We can get rid of that reading there that blew right past that seventh wave move. It blew past the seventh wave move again. So our wave counts need to start right about here. And you can see you're only in the first wave. Let me get rid of all the other lettering out there. So, boy, that's not a signal. You got a TD combo count that occurred during the last half-hour bar, but you got to close below, or it has to close below 58.62 in order to suggest there's some kind of pullback or retracement to the 58.43 type range out there. So inside the NQ, as we're speaking here, at the end of the trading day, well, it's only 2 o'clock or 10 minutes to 2. No signal there, that's for sure. There is a signal. It's called long and strong. That's what the 30-minute chart for the NQ. Let's go ahead and look at all 4 time frames out here. Let's look at the 120-minute chart out here. Now here, you can say with good reason that you are in wave number 7, potentially. Now, this is a 2-hour chart. The next candle completes in 11 minutes, and then the one after that at 4 o'clock out here. So just extended to higher highs. That just extends that pattern. You don't just trade that pattern. You need a confirmation at a minimum of that pattern. Then you need to close below Stevie's red line, and that would be priced at 58.47. It all depends upon what time frame it is that you like to trade. And when you get one signal that fails or is successful on one time frame, you come back and take a look at what's going on the next time frame out there. If we look at the 5-hour chart, well, the 5-hour chart says, sheesh, not a chance. Yeah, because this thing recycled. It got past wave number 7. We're just in wave number 1 out here. So, now their price is moving higher. Let's see if it is. No. Even the price relative strength divergent pattern is shot. It's gone. It's adios. It's sayonara. NQ. Looks strong to me. How does it look to you? We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I had another question from Cause in the Den, really with regard to the NQ. And here's what I'm going to do instead, because the question was about volume. We're in a short week out here, so volume metrics, all I can do is some math on that, some straight line math. And it's just not, who's to say that that's the correct way to try to make up for days, holidays, and so forth. I think what's more important to take a look at, just understand from a, when do you want to be bullish? When do you want to be bearish? When is it neutral with regard to signals out here? We spend a lot of time taking a look at the New York Stock Exchange. Let's go ahead and finish off the show by taking a look at the NASDAQ composite out here. New all-time highs, no question, on fire, headed even higher out here. In the bottom panels of my chart, the bottom panel is the advanced decline. The very bottom panel is the advanced decline oscillator reading. So that's taking a look at advancing issues versus declining issues. And just take a look at the difference, the spread between the 19 to 39-day exponential moving average. That's what that is. The panel just above that is the same thing except for the volume inside of the NASDAQ. Here's what you need to know about this. And I'm just going to come back here as an example, back into the November timeframe. So November 2016. And you watch the yellow line as a frame of reference. When the blue lines in each of these are above zero out here, the question is, do you want to be bearish? No. Because what you have here is you just have a full-blown signal that this wants to move higher. Again, this tool is not going to allow you to catch the top tick to sell or buy the bottom tick to buy out here. But if the trend is ever your friend out here, this is it. If you're trying to catch the beginning of that move, well, it actually took place yesterday at yesterday's close out here. So you can see back in November how the advanced decline line, for the most part, was above zero all the way, really definitively, you'd have to say, up until the December-ish time frame out here. But just take a look at how, the testing of that zero line, much like Stevie's red line, although a totally different computation out here. When both of these indicators are above zero out here, it's very clear. Likewise, when they're both below zero, you have a sideways to a down move that is in place. And you can clearly see today, both of them are above zero. So instead, what is likely to happen, based on the information, the knowledge that we have right now, is the markets are going to go ahead and finish strong into the close. Now, I'm just using this based upon just getting above it, just getting these volume, just getting not the volume, but just simply getting both of these tools out here for the NASDAQ composite to show us the typical behavior. Let me go see if I can find a space and time out here when we're really below. Here's an example. Right? This is kind of what you want to see. This is what you want to see. If we come back into the a topping pattern that formed in July of 2015, look at where the panel number 2, the volume, okay, take a look at where that volume oscillator is, below zero. Stays below zero really up until the time frame of October 2015. And you can see that the advanced decline aspect, also beginning in that July time frame, was also below zero. Didn't move above it until about August of 2015 out there. So it's another set of cool tools that can help you to really read what the message of the markets are. I wish that we had this entire set of tools. I used to, but don't have access to that data because the individual stopped compiling it for each and every ETF. Not every single one, but for hundreds of them. And so it was cool to go ahead and apply this set of tools to that. In any event, folks, have a terrific Friday. Get out there. Go watch that Alan Savoy 20-minute TED Talk out there. It'll probably change your view on climate change. Have a great weekend. We'll see you on Magical Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.